So Newell Brands crashes on disappointing earnings. As you can see, the stock did a gap and go. Yeah, it did close off the lows for the day. However, the stock was still down 26% or $2.56. Now, if we zoom higher up to the monthly chart, you can see how price has found a short-term bottom near that $6 level. But the main liquidity is going to be found lower at the monthly buy level at $3.50. And that was found, this zone was created based on this drop, this basing candle, and then the rally higher. Now, one thing I want to bring to your attention, why price was moving up only to move down. Well, this is the impulse move, correction, and then now I'm expecting another impulse move down. The other thing to note, if I move this aqua arrow down, is you also had a great shorting opportunity from this drop in price basing candle and then the drop, and it worked out to the T. Now, before we look at price action on the weekly and the daily chart, let's actually get into the news and the actual results. So shares of Newell Brands plunged 27% following the release of the company's fourth quarter earnings and its guidance for the first quarter and full fiscal year 2025, which fell short of Wall Street expectations. Despite the company's efforts to transform its operational structure and the reported year-over-year improvements in operating and gross margins, Newell Brands' preliminary outlook for 2025 indicated expected net sales to decline in the range of 4 to 2%, with core sales ranging from a 2% decline to a 1% increase. The guidance reflects the challenges faced by the company amid an uncertain macroeconomic backdrop and the ongoing transformation of structural economics. Now, the president and CEO emphasized the company's progress in 2024, driven by the disciplined implementation of its new corporate strategy and operating model. He highlighted that sales performance improvement and gross and operating margin enhancements despite the uncertain macroeconomic environment. All right, with that said, we're going to drill down to the weekly chart. And you did have some clues. Say you wanted to short at this monthly sell level. As soon as you saw this inverted hammer candle, even if you waited one more candle, that was definitely an opportunity to go short. And so let's say if you put your stop here, this would have been good for a reward to risk ratio roughly 1.39 to 1. However, if you're going for the medium term trade, you want to target just above this monthly buy level, and so you would be holding out potentially for a 2.44 reward to risk ratio. Now, was there any way to get in where you reduce your risk? Well, let's check this out. This is the daily chart now, and so price came in. Let's do this. Now, as soon as you saw price break this green candle here, that was also an opportunity to get short. Putting your stop above the pivot high, increasing that, shortening that risk. Now, if you take this from monthly sell level to a monthly buy level, now you're looking at a reward to risk ratio of 7 to 1. Now, why could you have reduced your risk here? Because you're in a monthly sell level. So, now again, best levels to get long, if we zoom back out to at least the weekly. Because price never took out this monthly sell level, the sellers are in control. So, the best levels to get long is going to be down at the monthly buy level at $3.50. Thanks for watching. Subscribe. Please like the video.